All right, everyone. I guess we're ready to get started. This is Ali Barrera, M&A manager at Acquira. So, Ali, how you doing today?
I'm good. How about you?
Good, good too. I just wanted to talk to you about the deals you're getting, some of the trends you're seeing in the market. So, yeah, let's start off with that. What trends have you seen in recent deals? That'd be industry related, I think.
Well, the trend that I'm seeing at the moment is that the market is extremely competitive. To be quite honest, we're sending out IOIs, very quickly once after receiving and reviewing the sim, and once I get in touch with the broker, they're telling me, for this business, I already received 10 offers, and I'm expecting to receive another five, which I think is kind of crazy. So the market is extremely competitive. You have to be when you send over an offer. I think you have to be very prepared to kind of you know push your case, if that makes sense.
Hmm.
Make sure that you are a compelling buyer for that business, and just try to get a call with the seller as soon as possible, and push for that call, because sometimes brokers will not even give you the opportunity or the time. So really push for that call and try to create kind of like a connection with the seller once you're on that call.
Okay. And kind of talking about sellers, how do you assess what their motivation for selling their business is? And do you think this has changed with how competitive the market is getting now?
So I think a lot of sellers are, they've been they've owned the company for, 15, 20, 30 years. Obviously, they want a high valuation, a high multiple, ultimately, a really good exit. But we're seeing, or I've been seeing, that one of their most important, I guess, factors is their employees. They want to ensure that post close, most of the team will be able to stay on. And not only that, they want to pick a buyer that will give their employees opportunities for growth. They don't want the business to stay stagnant, or as is, as they've had it. They want to ensure that they're going to pick a buyer that can grow their company and be able to give better opportunities to their employees.
Yeah, perfect. And kind of staying on this topic, so how often is it that seller motivation is a part of your evaluation criteria for these businesses?
I think most of the time it is. Um, Obviously, there's going to be sellers. I mean, I'm based in Miami, Florida. Miami is known for fraud. I'm going to be completely honest. And a lot of times, the owners, I've seen it here in Miami. I remember I sold like a pharmacy company. The day after closing, the owner was in, I think, Africa. Had gone like a private plane, was in Africa. And there was like an issue with licensing of the pharmacy, and that was a whole mess. So you see a lot of owners. It's just going to depend. You'll see a lot of owners that do not care for it. But then, yesterday we had a conversation with a company where it's just a 2x multiple, at a very high EBITDA, and that's very kind of rare to see. And when we got on the call with the owner, it took us weeks to be able to get on the call with the owner, just because they were being very decisive of who they wanted to put in front of that seller. So when we finally got on the call with the owner, and it was, that was her main priority. She wanted to make sure that her employees will be taken care of. She wanted to make sure that the seller will be able to grow the company outside of what she has been able to do, she and her partner. Like, for example, in their case, they had only focused on residential. They had done some commercial work, but the people that were in charge of the commercial side had kind of left the company, and they hadn't expanded it anymore, just because they didn't want to take on that responsibility if they didn't know it too much. So they want someone, they're gonna pick a buyer that will be able to expand the commercial side, if that makes sense. That they feel
Yeah,
that
yeah.
we'll be able to do that. So that's why I push a lot to have a call with the seller, just to understand. The broker is going to be able to tell you one thing, but when you speak with the buy with the business owner, they might be able to tell you something different.
Yeah, yeah, we have a little comment from Thomas. He said, "You really see that. I've only seen sellers who care about nothing else but money and speed of closing." Which,
Yeah, definitely. I mean, at the at the end of that call, the one that where the 2x multiple with a high beta, and sometimes it's kind of a push from the brokers. They want to pick up that check, the commission check, on the day of closing. Um, especially with SBA lending or financing, you kind of see, you put on your LOI, 3 months to close, but banks are going to take their time, and if there's holidays in between, they're going to take even more time. If you're getting to a closing where it's the time of, let's say, Thanksgiving, for whatever reason, that closing needs to be extended. I saw one where it was going to close the beginning of November. It actually closed second week of April. So obviously brokers want to make sure that you can get kind of a swift closing. If there's a cash buyer that says, hey, I can close in 60 days after do my due diligence, they might be more entitled to go for that offer. With banks, you just, it's not that it's uncertain, they just are going to take their time, as they should, to review the deal.
Yeah, yeah. Rich came on a few weeks ago, and he was saying too that most of the time brokers, the most important thing to them is just getting this over with and getting their part of it. But yeah. Anyways, we spoke about kind of some of the green flags and what you're looking for a seller, which is someone who wants to continue growing their business in the new ownership. But do you have any red flags that you keep in mind when assessing a business?
Um, you know, uh, I guess red flags might be, and it's not necessarily that they're red flags. It might be that they have just been advised wrong. A lot of sellers will not understand the concept of working capital. They want to, take out, the day of closing, take out all of their funds from their bank account, and have to pay any liabilities that are due, on their end, but then kind of forget about any other obligations. And that may not be necessarily their fault, that they don't understand that they need to kind of leave in just a bit for, and not just a bit, the necessary working capital for a new buyer to be able to run the business. It's not even about making money at that point. It's just being able to be able to run that business. Let's say that you buy a business that is seasonal. Let's say the season is, I don't know, from spring to fall, and you close that business in fall. You're gonna have 5 or 6 months of very low activity, where you still have to pay all the employees, have to pay rent, have to pay so many expenses, while you wait until the season picks up. So in those cases, either you need to negotiate a lower multiple, or you kind of have to come to an agreement with the seller of them leaving enough working capital for you to be able to sustain those months of low season.
Yeah, and talking about financial health in a business too. So what indicators do you prioritize when evaluating the health of a potential target? Financially, obviously.
Um, I mean, obviously, you always want to see kind of a safe trend. When you see too many highs and lows, I'm kind of wary of that. I prefer to see, they had post-COVID, they had, sometimes you see that they have losses, but then how do they recover from that? Not every business did well in COVID, and that's fine. And another thing I don't want to see is for them to include the PPP money or ERC money that they received from the government. That's fine if they used it, maybe that's how they were able to survive, but don't include it as your cash flow. That doesn't make sense to me. If they did, if they had a loss, let's say, sometimes you see that they did well in COVID, but then in 2021 they had a loss. It's just an effect of COVID. I don't think that's a deal breaker whatsoever. What I want to see is how they recovered, in 2022 and 2023. Something
Okay.
else I also ask for is WIP, work in progress and backlog. So let's say that they're still kind of recovering. Sometimes it happens. I want to see what they're expecting for 2024. Sometimes they're putting businesses on the market that maybe shouldn't be in the market just yet. They should probably be in the market maybe post tax season 2025, just to be able to see their whole trend.
Okay, perfect. Yeah. And I'm kind of relating to risk management, I guess. Yeah, how do you manage all these risks associated with acquiring a business in volatile or highly competitive industries? I think I want to kind of tailor this question a little bit more towards seasonal businesses, kind of what you talked about before. So what would you do for seasonal businesses?
I think it's going to depend a lot on your risk tolerance. If you want, if you're interested in a business that, let's say, uh, pools or landscaping or such, or you find, business that just calls to you, and it has seasonality in it, you might want to not close in November or December. You may want to kind of coordinate to close at the beginning of the season. The market right now is incredibly competitive, so maybe you have the opportunity to do that, maybe you don't. But just keep in mind, if it is it has seasonality, when are you going to close, and how is that going to affect your cash flow? And be
Okay.
prepared to be able to sustain that in the low season.
Yeah. Yeah. And because you're kind of, all about the market trends, what's the biggest industry right now?
All, all of them. I mean, solar is huge in California from what I've seen. Obviously, there's each state is different in regards to in regards to their licensing. I think like New York is having not issues, but plumbing, electrical, not electrical, plumbing in particular, and HVAC are having. You need to be a little bit more cautious in regards to licensing. But I think no deal is similar to another one. Each deal is going to be very different in regards to the employees, organization, how involved the owner is. So each deal I take it as this is completely new. This is not similar to any other deal, and I review it from that perspective of what do I not know that is not on the sim. Those are the questions that I try to ask. Does the business make sense? At the end of the day, that's my perspective coming from being based in Miami and seeing so much fraud. Does the gross profit make sense? Does the cost of goods make sense? You know, how is the trend? Why is 1 year much higher than the other one?
Okay. Well, thank you so much. That's all the questions for me. If anyone else has another question, just raise your hand or go ahead and speak up and whatever you need to do. We'll give you a couple minutes to start or whatever, whenever you're ready.
Can I ask questions?
Well, looks like there aren't really any questions. Well, thank you so much for coming out today, Ale.
I did have a
All right.
question,
Oh,
Golly.
sorry.
Yeah,
Yeah.
my name's Mark, by the way. Sorry about that. I didn't change my screen name now, but my name's Mark Edwards. And what the question I had to have was, have you seen anything with like the private placement form Sims?
What do you mean?
Like how's the market in like the middle market area for private placement platform trades?
Okay. I'm sorry, I
So
may not
say
be
for,
understanding.
for
Okay.
like casinos and things of that nature, like deals that's like 500 million or more, are they in revenue? How are they looking right now? Are they being stagnant or are there buyers in the market for those type of transactions?
So to be quite honest, my focus is more so on businesses that have cash flow at least 700K to probably 2 million.
Okay.
Um, I'm going to be very frank. I do not like to waste time. If I don't think that it fits for acquire, I'm not gonna even read it. I go through probably 20 to 40 sims a day now.
Cool.
So I would love to read a sim that has at a has a much higher EBITDA, but it's just for our wheelhouse, it doesn't make sense.
Sure.
For what I am understanding or hearing that businesses that have higher EBITDA, it goes past the SBA limit of 5 million, let's say, it's going to be a lot more difficult to attract a buyer that can fund it.
Okay.
So, if your focus is, businesses that are past the SBA limit, I would make sure first to ensure my financing so that once you approach a business that has, let's say it has a 20, $30 million asking price, you can tell them exactly how you're going to fund it from day one. It's not like, okay, let me look at it, let me talk with the business owner, with the seller, and then I'm gonna go and think about how I can fund it. If you come prepared, you might even be able to negotiate a better deal for you.
Sure. So you're saying have the cash on the table first
Yeah.
before you find a deal.
Yeah.
Okay.
If you have, if you're gonna go raise equity, kind of have those letters from those partners.
Sure.
If you have, if you're gonna have another business partner, have them on a call with you. Show your proof of funds or whatever. Just be prepared for that conversation. Nobody likes to waste their time at the end of the day. I think that is the best way to, and given that SBA is not able to let's say if it's a business for 20 million, you know, you're gonna need a lot of, if you're gonna use SBA financing, you're gonna need either a lot of seller financing, which they might be opposed to, or you're gonna need a lot of, you know, equity, outside equity, or you bring in your own equity. So just be making sure that you can explain to the broker and to the seller how you're gonna fund it.
Sure.
And you know, once you have, let's say, cash on the table, you have a much higher negotiation power.
Okay. That makes sense. Thanks a lot. Are you on LinkedIn?
Yeah, I am. I don't use it as much, to be quite honest, but yeah, I am.
Okay. Awesome. Thanks a lot. Appreciate it.
Of course.
Hello, this is David. I have a question. You've seen any trends, you know, in the home health space,
Yeah, I mean,
either in Florida or any other state, you know, what you've been seeing lately?
yeah, I mean, Acquire's focus is more so on the service industry. That includes the home services. They're just going very quickly, especially in Florida. What happens in Florida in particular, I know that, you know, if a business comes out, let's say, you know, this beginning of next week, and it's a, you know, very well priced, it's a good business, makes sense, you know, by Friday they might have a lot of offers on the table for that business. But then, and it's going to sell very fast, or it's going to go under contract very fast. What also happens in Florida, like let's say it's a business that gets priced at 5 million and the real price or valuation should be probably around 3.5, you will see that business listed on Biz by Sell for about a year. What happens a lot in Florida is that the sellers want for people to make an offer. But you know, if you see a business that's, you know, maybe cash flowing 500K and it's, or 700K and it's priced at 5 million, you don't even want to touch it. You know, what else are they going to be kind of complicated about? But that's just the mentality. I think that's just the mentality of Florida sellers. They want to hear offers, so that they put it very high. And so when you see a listing in the market that has been there for a while, it doesn't hurt to knock on their door. Maybe you can even get a better deal, you know.
I've been also sort of seeing brokers not even putting a price. So I don't know if it's just
Yeah,
this
that's very
year
common.
trend, or I don't know. Yeah, I've never seen that, but just out of nowhere, starting 2024, I've seen brokers just posting home health agencies, but not actually putting a price to it.
Yeah, to be quite honest, that's getting even more and more common. That's not something that I personally like. I prefer, obviously, when there's an asking price. When there's no asking price, what I would do is send over, and you want to put an offer on it. Sometimes put a range, put a range between, I'm willing to pay for this without any initial, additional information. I'm willing to pay a price of 2.5 to 5 million. You could put a big range. That could start the conversation, or just put a multiple, based on stabilized EBITDA. I'm willing to pay a 2.5 to 3.5x multiple. And if that doesn't work, because they want a much more confirmed number, put an offer of what works best for you. You don't want to overpay for something, and then you have to backtrack on that offer, and it's not a good look for you anymore. Especially if it's a broker that has multiple listings in the same industry, they might not be as inclined to work with you moving further. So when you send out those offers, send it out, at the price that you think would work for you. I mean, sometimes we'll send out, even when there's when there's an asking price, but it doesn't make sense for us. We'll send out, an offer for less. Obviously, if they have other 3 offers already at asking price, then we just, we bow out politely. But that's what worked for us.
Thank you.
Go ahead, Nate.
Hi. With offers going out so quickly, how do you make sure that, and brokers putting pressure on you to close quickly, how do you make sure that the deal is structured that you have enough time to do the due diligence? Are we just leaving a bunch of good deals on the table, or are there steps that can be taken to not drag it out, but make sure there's time to be thorough.
No, I think just to at least start the conversation, be competitive, and try and actually get a seat at the table. Send out an IOI first, indication of interest. That's what we do. And then have those conversations with the seller. See what they're looking for, what works best for you, and then if you feel confident enough and you think you want to pursue this deal, then send out a LOI. In the LOI, once you prepare that LOI, you should be kind of aware of what conditions you are going to feel comfortable with. If you feel comfortable with, let's say, I don't know, just put something crazy. You feel comfortable with a 90-day due diligence, that's going to work for you. You should put it in the LOI. If they don't accept it, then that's fine. But that's what makes you feel comfortable.
Thanks.
Sure thing.